Good morning, good afternoon, good evening. My name is Market Maker 69420, and welcome to the Saturday Crypto Show, where we dive deep into everything crypto related for the weekend. As the cryptocurrency market navigates a turbulent March 2026, Bitcoin hovers around 68,000 amid geopolitical tension from the US-Iran conflict and mixed macroeconomic signals, while Ethereum struggles near 2,000 in a landscape of extreme fear and institutional repositioning. This update delves into key metrics and trends, highlighting a bearish undertone tempered by regulatory process and ETF inflows that could spark a rebound. When looking at liquidity and order book depth, crypto liquidity remains fragmented across exchanges, leading to a liquidity mirage where headline volumes amass thin order book prone to sudden collapses. For Bitcoin, on major platforms like Binance, order book depth within 10 basis points of mid-price varies intraday, peaking at 3.86 million around 11 UTC time and dropping 42% to 2.71 million by 21 UTC, reflecting institutional desk closures and heightened slippage risks during off hours. Overall, market depth has shrunk, with events like October 2025's liquidity crisis easing 98% of visible bids in second, exacerbating price impact from large orders. Altcoins face even worse fragmentation, with liquidity concentrated on fewer venues as regulations evolve, potentially improving efficiency but certainly amplifying volatility in low volume pairs. When looking at volatility and price swings, volatility in crypto market is running at elevated levels, approximately 3 times that of traditional stock, with daily swings of 3 to 5% common for Bitcoin compared to gold's 1% moves. Bitcoin's recent price action exemplifies this. It dipped below 70,000 amid US-Iran war fears, racing weekly gains before rebounding to test 74,000, only to retreat to around 68,000, 6% weekly rise despite intraday whipsaws. Ethereum has seen similar turbulence, trading in 1900 to 2100 range with a negative 33.55 year-to-date drop. Market-wide, the crypto fear and greed index lingers in extreme fear between 10 to 24, signaling capitulation zones that historically precede rebound but also fuel amplified swings tied to macro events like the upcoming US jobs report. Options data shows 3-year high in Bitcoin volatility, with traders eyeing recovery but hedging against further 50% correction. Looking at funding rate for perpetual future, funding rates for perpetual futures indicate divergent sentiments across assets. Bitcoin's OI weighted and volume weighted rates stand at positive 0.0025%, signaling bullish bias as longs pay shorts, supported by resilient ETF inflows. Ethereum shows a mildly negative rate of minus 0.0002%, reflecting bearish pressure where shorts compensate longs amid altcoin underperformance. Solana's rates are strongly negative across exchanges, negative 0.0041% to negative 0.02%, underscoring bearish dominance and potential for short squeeze if sentiment flip. These 8-hour rates highlight a market where Bitcoin funding supports stability, while altcoins face funding-driven downside risk in a deleveraged environment. When looking at momentum, continuation, or reversal patterns, technical indicators point to a mixed outlook with bearish short-term bias. Bitcoin exhibits neutral oscillators and moving averages, but a 3-day death cross and rejection at 69,200 to 70,200 suggests potential reversal to lower highs, aligning with broader downtrends. Ethereum shows conflicting patterns, short-term bearish channels and rising wedge targeting 1,500, contrasted by long-term bearish ascending triangle and bounces from 1,900 to 2,000 support. Market-wide momentum leans toward continuation of the bear phase, with 38% of altcoins near all-time lows and Bitcoin dominance enforcing a Bitcoin season. Though oversold RSI level, crypto RSI at 53 hint at reversal setups if macro catalysts align. When looking at Bitcoin dominance and altcoin behavior, Bitcoin dominance holds firm at 58.16%, confirming a Bitcoin season where altcoins lag significantly, with the CMC altcoin index at 35/100 and 38% trading near all-time lows. Bitcoin's market cap stands at around 1.4 trillion, with a total crypto cap of 2.2 to 2.4 trillion, underscoring its role as a safe haven amid volatility. Altcoins like Ethereum minus 54.2% over 6 months and Solana around $90 show compressed ranges and bearish decoupling, while outliers like Polkadot surging 28.6% on protocol news, but overall facing supply pressure from unlock. This dominance suppresses altcoin rallies, though forecasts suggest a potential shift if Bitcoin stabilizes above 70,000. When looking at open interest and liquidations, total open interest across crypto sits at 96.2 billion, down 1.2% recently, indicating deleveraging after heavy selling. Bitcoin OI remains elevated at over 3.15 billion, with high levels signaling potential short squeeze if price reclaims 68,500. Liquidations in the last 24 hours totaled 96.6 million, predominantly longs 70.9 million, with Bitcoin at 23 million, mostly longs at 18.9 million, and Ethereum at 14.7 million. This long heavy wipeout reflects bearish positioning, but reduced OI suggests the market is resetting for lower volatility ahead. Looking at news sentiment and external catalyst, sentiment is overwhelmingly bearish due to the US-Iran war escalating volatility, with Bitcoin dipping below 70,000 on conflict news and broader risk-off move. However, positive catalysts including regulatory process, SEC and CFTC advancing harmonized rules, a lawsuit against Binance dismissed, and institutional moves like Citibank's Bitcoin custody plans. ETF inflows turn positive at 834 million weekly, led by 506.5 million in one day, countering outflows. Macro events like the March March 18th Fed rate decision, pause likely but cuts anticipated, and U.S. jobs data could pivot sentiment, with bullish forecasts eyeing 110,000 to 150,000 for Bitcoin amid risk-on fever. X-posts reflect mixed views, from MicroStrategy's defiant hodl stand to optimism on pro-crypto ruling. When looking at technical levels and weekend-specific patterns, Bitcoin's key supports are at 62,851 to 63,000 and 66,500, with buy walls forming, while resistances loom at 70,000, 70,200, 71,523, and 73,000, and 73,000 and 74,120. Ethereum supports at 1,900 and 2,000 Fibonacci levels face resistance at 2,107 and 2,200, and a descending trend line near 1,980. Weekend patterns show illusory depth, higher visible liquidity but thinner book during low institutional activity, increasing slippage risks as seen in past Saturday's sell-off. With today being Saturday, expect muted volumes and potential V-shaped reversals, as evident by recent geopolitical dips recovering intraday. In summary, crypto market in March 2026 is entrenched in a deep bear phase, with Bitcoin's dominance reinforcing altcoin weakness amid high volatility, thin liquidity, and negative funding for many perp. Yet positive ETF flows, regulatory tailwinds, and oversold technicals position the sector for a potential reversal if macro catalysts like Fed pauses or softer job data alleviate fears, targeting 100,000 for Bitcoin by year to end. All right, that's all I got for you guys today. Don't forget to like, comment, and subscribe if you enjoyed the content. And if you'd like to support the channel, feel free to buy me a coffee on my Patreon. Thank you. Bye-bye.